Hello and welcome to Livewire's C-Suite reporting season coverage. My name is Chris Conway. Today I'm chatting with Lawrie Conway, who's the CEO of Evolution Mining. He's going to be talking to us about the company's recent results. Lawrie, thanks for sitting down with Livewire.
Thank you for having me. Really pleasure to be here.
So in terms of the results, let's face it, they were really a cracking set of results. So well done. The market seemed to like them as well. But just for investors, what were the key highlights and what were the key highlights for you?
The key highlights for me was that we set out at the start of the year to make sure we got back to more consistent and reliable performance after a couple of years of missing guidance. And through doing that, in the 4 quarters each of last year, we were able to deliver the plan. And then by doing that, managing our costs, we've ended up with a record financial performance that has matched the operational performance for the year. So the highlights for us is our profit was a record at 926, up 119%. Earnings per share 46 cents per share was a record as well, which was up 14%. And therefore we generated just under $800 million of cash flow net for the year.
Yeah, you touched on it there, Lawrie. It's one thing to benefit from a higher gold price, but it seemed to me what really drove the result was, production, which, as you would know, is really a product of that operational efficiency that you were talking about. So just in terms of what the business has done differently over the last 12 months to drive that result, can you take us through that?
Yeah, and I think it's a fair point that you raise. Our profits and cash flows were more than double, and yet the gold price only moved up 35%. So it was really on our operational performance, where each of the operations contributed. Cost control also helped for us. So that really did drive our performance for the year.
I noted in some commentary yesterday, Lawrie, that you talked about the results being achieved through safely delivering to plan, which is always critically important. So just talk to me about the safety element. I imagine you're pretty proud of the team's record on that front.
Yeah, I mean, if we look at it, our lagging indicator is our recordable injury frequency. So how often people are getting injured. And that reduced by 35% to a real low of 5, and in the mining industry, 5 is really at the leading edge. And what was even more pleasing for me is that it was every operation improved their safety performance in the year. So what it meant is that after a couple of years of probably not consistent delivery operationally, we did that this year, but we didn't do it at the risk of people being unsafe. So that was the real pleasing part in the safety aspects. And I think the other part is we focus a lot on our critical controls, so things that can be more than your cuts and strains and sprains, things that could be more fatally injuries, and the assurance audits on those shows that we'd improved there as well. So that's what sort of gave me the confidence that we'd done it safely for the year.
As good as the results were, Lawrie, as you know, the market always wants more. I know you don't control the way the market reacts, but what levers might you be able to pull in terms of keep driving those efficiency and production gains in the coming financial year?
Yeah, so for us, really, FY26 is almost, as I said on the quarterly call, it's a rinse and repeat. Our production range of 710 to 780 is exactly the same as last year, and that's because we've got, Mungari's production will increase now that we've commissioned that plant expansion. Cow will be a bit lower, so it's every asset's got a role to play this year to make sure we build on what we did in FY25. I think we've managed our costs well. They'll move up by about 4% this year, but on the back of the gold price is about $800 an ounce higher than what we achieved last year. The cash flows will be better. So what we're really looking for is how do we build on that momentum, consistently continue that in FY26, because then it will reward our shareholders with that cash generation.
Let's shift gears a little bit, Lawrie, and talk about copper production. Was up 12%, I believe, and you've talked about the capacity to bring more copper assets into the mix. So, what might that potentially look like, and what percentage of revenue could copper constitute as you move forward?
Yeah, the 12% lift in copper was really owning North Parkes for a full year. We only owned it for a half last year, so we haven't introduced any new copper production into the group in the last 12 months. But, we saw in FY24, copper was about 30% of our revenue. FY25, it was 25%, and that was really on metal price that gold went up 35%, copper only went up 6%. So at 25%, we believe we can have up to 40% of our revenue from copper. So that says that you could introduce another asset similar to North Parkes or Ernest Henry. But the other thing that it also does mean is that both those operations have got about 1.5 million tonnes of processing capacity over and above what we're mining at today. So we can expand our copper production just through those two assets if we really want to.
Right, and that's that optionality that you've talked about, yeah?
Yeah, it's just having that flexibility. And I think, for gold investors, they like that we've got copper because they smooth out those cash flows. If you look at the forward forecast on gold, it's going to trend down at some point, and copper will absolutely trend up based on the need of copper as we go more into renewables.
Some of the recent key milestones, Lawrie, have included the approval for the Cowal continuation, $430 million project expansion, if I'm not mistaken, and Mungari, the mill expansion, you talked about it earlier. So how do they set the business up for that future success?
Well, firstly, the Mungari project, what we're really proud about there, we delivered that early and under the original budget. So that's going to help in terms of we're bringing that production on at record gold prices. So getting that earlier production is going to help us from a cash flow perspective. And the other thing is that now that we've finished that investment, we can move on to Cowal. So Mungari's cash flows will increase dramatically as we go from 130,000 ounces to 200,000 ounces, generating a lot more cash having invested there. Cowal, the OPC, will extend the open pit operations by 10 years and take the mine life out to 2042. We'll be investing $430 million over the next 7 years to bring that into production. And therefore, Mungari's cash flows help us to then invest into Cowal. But what's probably most important is that Cowal is probably our number one asset. It'll be able to fund that cash flow required for the project and still generate cash for the business. So the combination of the two means that we can invest in the business while still generating significant cash.
Lawrie, just to follow up there, if I may, with the Mungari mill expansion, like you said, ahead on time, ahead on budget. It seems to me, as an external observer, that that's pretty hard to do. You often hear about mining companies, they have cost blowouts and overruns in time. How did you manage to, it was 9 months, I think, that you beat by. It wasn't a couple of weeks. Like, you really blitzed that mill expansion. How did you manage to do that?
Everything that needed to go right went right. So we were able to award a contract for the EPC with GR Engineering Services. And it was at a time when the market was really tight. So when we approved the project in June 23, everything in WA was really hot and hard to get equipment, hard to get people and the like. But this team had just finished a project, so we were actually able to get them in early, and it was a full team. And they had equipment. So that helped us in that regard. I think the second part is with the construction, we were able to isolate it from the existing operation. So it didn't have much interaction. So it was able to just do what it needed to do when it needed to do. And then the third part was the equipment, the long lead items, they actually arrived early. So we were fortunate in that regard. And particularly in WA around that Christmas period, the roads all closed for the period of about 8 weeks. So if that equipment didn't arrive early, we would have probably been about 6 months early. So everything that had to go right went right. And we're now into that commissioning phase. So yeah, it's unheard of, but we're pleased that we're able to do it.
Just looking ahead, Lawrie, are there any other key projects or developments that you can talk to us about that you're working on over the next 12 months?
The fortunate thing, we've got every one of the assets have actually got growth projects that'll either extend mine life or grow production. And that's something that I don't think a lot of portfolios have, where they have one or two. Every one of our assets have got it. So what we've got at the moment is that Cowal OPC is into construction now. We've got an opportunity for additional ore sources at Ernest Henry, which is an ore body called Burt up in the top that we can mine separate to the main cave that we're operating out of now. We've got an extension below the current mining area at Ernest Henry that we're finishing a study on right now. And then at North Parkes, 600 million tonnes in resource there. We've got a wealth of ore bodies that we can look at. The main ones that we're doing is E48. It's a sub-level cave. We've approved that to go into execution last month. So that'll get developed and operating this year. And then E22 is that next big ore body that we're looking to approve to go into production. We don't need to do that until FY27, but the works will happen through this year to get that ready and take it to the board for approval at some stage. So a lot of opportunities really laying ahead for us.
In terms of the strong profit result and now, healthy balance sheet, I noticed that your gearing came down from 25 into 15, but you did choose to increase the dividend in this period, Lawrie, which I'm sure long-term investors will appreciate. But there's always that balance between rewarding shareholders and then thinking about CapEx and then exploring new opportunities as well. So how do you strike that balance?
Our ability over the last couple of years to demonstrate our management of capital is being very well disciplined. We've been able to reduce our gearing from 33 to 25 and now 15.
Yep.
While at the same time, last year we invested just under $1.1 billion in projects in the business for the future. And then we've been able to increase our dividends. So we believe we're demonstrating to our shareholders that they'll get the returns in this high price environment. We can still reinvest in the business and we still manage that balance sheet from a debt. So yes, we saw our nearly 3-time dividend versus last year. That's $400 million we'll pay out this year in dividends. And that's about 31% of all the dividends that we've paid out to date in 1 year. So we want to demonstrate to our shareholders that through this high price cycle, they are going to be rewarded, because it's something that I think in previous cycles we haven't done very well as an industry, and we want to make sure that we continue to show that we can do that for them to basically win their trust and support as we go forward.
Lawrie, there's been a lot of M&A in the gold space in recent years. I'm sure you get asked this question all the time, but does Evolution have a strategy in the current environment? You're looking at opportunities?
Yeah, look, we're always looking. I think as you'd see from us, our strategy's been pretty consistent. So 10 years ago, we started our first acquisition and we've sold a lot of assets in the last 10 years as well as bought assets. So it does demonstrate that we don't get too attached to assets, but we make sure it's the right time to buy an asset. There's always been an opportunity. We don't determine ourselves when we can buy those, but our team is always looking. We think right now, making a lot of money for our shareholders and making sure they get some of that back through dividends is just as important. But there will be a time in the coming couple of years where we'll bring assets into the portfolio. We believe having up to 8 in the portfolio is about the right size and scale. We've got 5 operating assets right now. But we don't have to rush out, given what I was saying earlier, that every one of our assets have got either a mine life extension or expansion opportunities. So there's not a lot of urgency. And as you also see from our results, with a high margin business, that we don't have to really just do a deal.
Lawrie, thanks so much for sitting down with Livewire. Really appreciate it.
Thank you. Thanks for having me this morning. Really appreciate it.
If you enjoyed that interview as much as I did, make sure to give it a like, and don't forget to check out the rest of the reporting season coverage available on the Livewire Markets website.